Three FBAR offshore topics you just can't ignore. You've mastered the basics of FBAR, but the IRS compliance web is far wider and more complex than you can possibly think. This video reveals the most critical and often overlooked offshore reporting requirements that could land you in hot water if you're not careful. So you've been good. You've filed your FBAR, FinCEN Form 114 year after year. You see that the total balance of your foreign accounts ticks over $10,000. You file the form, you figure you're all square with the US government, but what if I told you that the FBAR is just the tip of the iceberg? What if that one form is giving you a totally false sense of security, while other more obscure reporting rules are exposing you to financially devastating penalties? The compliance web is far wider and more complex than most people realize. The IRS is aggressively targeting offshore non-compliance, and its net is catching a lot more than just FBAR filers. There are three critical offshore topics that go way beyond the basic FBAR. Ignoring them could lead to penalties that make FBAR fines look like a slap on the wrist. As a tax professional who guides clients through this minefield every single day, I see the costly mistakes people make when they assume their compliance journey ends with just FBAR. In this video, I'm going to break down the three offshore topics you absolutely can't ignore. Hi, I'm tax attorney Chad Silver, founder of Silver Tax Group. We're one of the most aggressive and experienced tax defense firms in the country. We help clients around the world fix their FBAR compliance, resolve IRS problems, and protect their finances. We don't just fill out a form. We plan your strategy, build your disclosures, and we defend them if necessary. All work is done in-house by our legal and tax professionals. Section 1. The form you're probably forgetting, FATCA and Form 8938. The first and most common landmine after the FBAR is a form with a deceptively similar name, Form 8938, the Statement of Specified Foreign Financial Assets. This form came out of the Foreign Account Tax Compliance Act called FATCA. A lot of taxpayers understandably think, I have foreign accounts. I filed my FBAR. I'm covered. This is a dangerous and flat out incorrect assumption. Here's the critical distinction. The FBAR and Form 8938 are handled by two different government agencies for two completely different reasons. The FBAR is part of the Bank Secrecy Act and is filed with FinCEN, the Financial Crimes Enforcement Network. Its main goal is to spot and prevent money laundering. Form 8938, on the other hand, is an IRS form you file directly with your Form 1040 tax return. Its purpose is singular: tax compliance. The IRS wants to know about your foreign assets to make sure you're paying US tax on your worldwide income. This separation leads to three huge differences you need to understand. Number one, where you file. The FBAR is filed electronically and separately through FinCEN's BSA e-filing system. Form 8938 is just another attachment to your annual tax return, like a Schedule C or D. If you get an extension to file your taxes, you've also extended the deadline for Form 8938. The FBAR has its own deadline and separate automatic extension to October 15th. Second, and this is a big one, are the reporting thresholds. They are completely different. The FBAR has a single, simple trigger. Did the combined total of your foreign accounts exceed $10,000 at any point during the year? And if it did, then you got to file. Form 8938 is way more complex. The thresholds are way higher and depend on your filing status and where you live. So for a single person living inside the United States, you only have to file if your specified foreign assets are worth more than $50,000 on the last day of the year, or more than $75,000 at any point during the year. For a married couple filing jointly in the US, those numbers jump to $100,000 and $150,000 respectively. Now for expats, the numbers are higher. A single taxpayer living abroad doesn't need to file a Form 8938 unless their foreign assets exceed $200,000 at year end or $300,000 at any point during the year. It's completely possible to file an FBAR, but not Form 8938, or in many cases, both. Third is what you report. The FBAR is focused on financial accounts. Form 8938 is broader, covering specified foreign financial assets. This includes the same bank and brokerage accounts, but can also cover things like stock you hold directly in a foreign company, partnership interests, foreign hedge funds, and some foreign life insurance policies. The penalty for failing to file 8938 starts at 10 grand. If you get a notice from the IRS and decide you still don't want to file, which is dumb, that penalty can climb by another $10,000 for each 30-day period you're late, up to a maximum of $50,000. And this is totally and completely separate from any FBAR penalties you could possibly incur. Forgetting this form is not optional. Section 2, the words that determine your fate, willful versus non-willful. The second topic you can't ignore is the difference between willful and non-willful mistakes. In the world of offshore compliance, these two words mean everything. They are the difference between a manageable penalty and a penalty designed to financially destroy you. When taxpayers find a reporting mistake, most assume it's an honest error, or what the IRS calls non-willful. A non-willful failure is one that comes from negligence, a simple oversight, or a good faith misunderstanding of the law. And that's what the case law says, a good faith misunderstanding of the law. But here's the scary part. What you see as an honest mistake, the IRS might view as something way worse. The IRS standard for willfulness includes willful blindness or reckless disregard. Willful blindness means you actively tried to avoid learning about your duties. Reckless disregard means you knew or should have known there was a high risk, you weren't compliant, and you did nothing to find out. The government has successfully argued that simply checking no on your tax return to the question about foreign accounts without even looking into it can be an act of recklessness. And this shows up on Schedule B. And the part about the perjury is when you sign your return, you sign it under penalty of perjury. So if they look at it and you had foreign accounts and you checked no, but really was yes, well, there you go. So the government has successfully argued that simply checking no on your tax return to the question about foreign accounts without looking into it can be an act of recklessness. They don't have to prove you are intentionally hiding money. They just have to prove you are reckless. And this shows up on Schedule B of your 1040 because there's a question that says, do you have foreign accounts? And some people check no when the answer is yes. Well, you just signed that return under penalty of perjury, and there you go. For a non-willful failure to file an FBAR, the civil penalty can be up to about $16,536 per year. And that figure is adjusted for inflation. Thanks to the recent Supreme Court decision in Bittner versus United States, this penalty is now applied per form. So like per year, not per account, which is a huge relief. But failing to file for several years can lead to penalties of over $50,000. And remember, the IRS can go back 6 years. Now let's talk about willfulness. If the IRS decides your failure was willful, the civil penalty is the greater of about $165,353, or 50% of the highest balance in the account during the year of the violation. So let me say that again, 50%. Imagine you have a foreign account with a high balance of $500,000 that you didn't report. A 1-year willful penalty could be $250,000. If this went on for 3 years, the penalties could easily wipe out the entire account. This isn't a penalty, it's like totally confiscation by the government. And these are just the civil penalties. Willful violations can also lead to criminal charges with potential prison time and even bigger fines. And here's the tough part. The burden is often on you, the taxpayer, to prove your mistake was non-willful. The IRS doesn't need to prove you are a criminal mastermind, just that there was a pattern of reckless behavior. Things like having large balances, using accounts in known tax haven jurisdictions, or giving false information to your tax preparer can all be used as evidence of willfulness. Figuring out where you land on this spectrum is the single most important thing you need to do before trying to fix any past mistakes. Section 3, the lifeline you need to know, streamlined filing compliance procedures. After hearing about $500,000 penalties, you're probably feeling a little panicked. You just realize you might have an unreported account or missed a form from a few years back. And so what do you do now? Do you just file the missing forms and throw a Hail Mary and hope the IRS doesn't notice? That approach is called the quiet disclosure, and it's incredibly risky. Just sending in old forms without going through an official IRS program is a great way to get your account flagged for an audit, and you'll have zero protection from the full range of penalties. The good news is the IRS has created an official lifeline. It's called the Streamlined Filing Compliance Procedures, or SFCP. This program is made specifically for taxpayers whose failure to report was non-willful. If you can certify under penalty of perjury, which basically means you just sign the form, that your mistakes were from negligence or real misunderstanding of the law, this program is your best path back to compliance. And at Silver Tax Group, we can help you get through that program with no sweat. It's critical to know that you can't use this program if the IRS has already started an audit of your return. You have to come forward in advance voluntarily. That means you have to beat the IRS. The program has two main versions, one for US residents and one for those living abroad. But the core steps are similar. Generally, you have to, one, file amended or original returns for the last 3 years, reporting all previously unreported foreign income. File any missing information returns for those 3 years, like that Form 8938 we just talked about. File delinquent FBARs for the last 6 years. And finally, submit a detailed narrative, a signed certification statement explaining exactly why you failed to report and making the case for your non-willful conduct. We can help you with all that. The benefits of doing this are huge. I cannot overemphasize that. For those who qualify for the Streamlined Foreign Offshore procedures for non-residents, the IRS waives all penalties. And that means you have to have resided outside the United States for 330 days. There's no FBAR penalties. There's no failure to file penalties. There's nothing. You pay the back taxes you owe plus interest, and you're back in the clear. For U.S. residents using the Streamlined Domestic Offshore procedures, a much smaller 5% penalty is applied to the highest total balance of your unreported assets, but all other penalties are still waived. This program is the IRS's olive branch to you. It's a formal way of saying that honest mistakes happen, but it's a complex process. An incomplete or unconvincing non-willful statement can get you rejected from the program and throw you right full-blown into an audit. And that can expose you to the very same willful penalties that you're trying to avoid. So don't do this on your own. Call us and we can help you through it. So let's quickly recap the 3 topics you can't ignore beyond the FBAR. First, remember FBAR isn't the only form you have to check if you need to file a Form 8938. Which is totally different rules and thresholds. Second, the line between willful and non-willful mistakes is the most critical factor in what happens next, with willful penalties being truly life-altering. And third, if your mistake was generally like non-willful, the IRS provides a powerful lifeline through the Streamlined Filing Compliance Procedures, where you can come clean without facing crippling fines. The world of offshore compliance is complicated, and the stakes are high. Your situation is unique, and you can't navigate these rules based on a video alone. The absolute worst thing you can do if you think there's a problem is to do nothing and hope you can get away with it. If you're unsure about your filing duties, or if anything in this video has you worried you might have an unreported foreign asset, I urge you to take action. Call Silver Tax Group for a confidential consultation with our team. Call us at 855-900-1040. Visit us at silvertaxgroup.com. We handle these issues every day, and we can help you understand your specific risk and figure out the best way forward. Don't forget to subscribe for more critical updates on navigating U.S. tax compliance, and thank you for watching.